Well, it's a bullish candle that promises an upward movement after the end of the downtrend. The next pattern that we should now evening star. Crows down, soldiers up. Buyers take control. Three models only. Join. Two candlesticks, three candlesticks, four candlesticks, however many we have, whether we see them at the top or at the bottom, their combination conveys a certain meaning for us. Pay close attention. Right now, on this board, I want to, for example, create a morning star pattern. Look, a bearish candle, one with a small body, then a small bullish one, and finally a bullish candle. Remember the time frame combination rule I showed you. To combine these, just use the first candle's open and close. In those four scenarios where we need one candle from three, we can create it. The first rule is to take the open from the first candle. It's that simple. From the first candlestick, in those four scenarios where we needed a single candlestick, the open, close, high, and low, using these four, we can create a candlestick. The first rule we need to follow when combining candlesticks is to take the open from the first candlestick. That was very simple. We said that in a bearish candlestick, the open is at the top and the close is at the bottom, right? So from the first candlestick, we're supposed to take the open. So we draw a line for the open of the first candlestick and place it here. We're building it ourselves. From the last candlestick, we take the close. We said in a bullish candlestick, the open is at the bottom and the close is at the top. It's very simple. This is the open, this is the close. From the second one, I take the close. So here, the body, or what we call the body of a new candlestick is formed. Now let's move on to the shadows. We said the highest point that these two candlesticks, or these three candlesticks, or this group of candlesticks have seen in price. We select that. Thank you. The upper shadows of the new candlestick and the lowest point that these candlesticks have seen together, you select that as the low of the new candlestick. Guys, which monthly candlestick does this look like? The hammer candlestick, or what we call the Charkesh spinning top. Okay, regarding the rules of the hammer or spinning top candlestick, what do we expect from it? We said we expect to see this candlestick at the end of a downtrend, and it indicates a reversal or trend change for us. Why? Because its long lower shadow shows that a demand has emerged that has eliminated the supply. In other words, it was a bearish candlestick that here has been absorbed as a shadow and moved upward, and here we witness a reversal. So there's no need to memorize that this just these hammers. Well, when this demand is gone, as we said, we want to see this at the end of an uptrend. Dojis mean balance. Its open and close are at the same point, right? That's what forms a doji. As I told you before, we basically only work with two types. Either the combination forms as a shooting star or the combination forms as a hammer. Now with this rule we've learned, let's go and compare the previous examples together one more time. What combination each of them is. And with the definitions we had, for example, we would say here we had a 3 white soldiers pattern. And we would say at the end of a downtrend, we expect a bullish move. What does that mean? Now, using the candlestick combination rule, we know what this is. We would look at how many candlesticks this is. Bullish reversal. Up and indicate powerful buyers in 3 pairs of commodities or in the same market we are working in. So guys, wasn't this the definition for all of them? And just this easily we could see and understand that if we want to consider these, we saw that it doesn't always form with all the candles. Look guys, one point you need to keep in mind here is that we are getting familiar with the hidden angles of the market. We are seeing things that at first glance many traders don't notice. They are still waiting for those other patterns, those other candles. Hidden market hammers. Hammer profit. The Bourget, and for these candles to come down one after another, let's read its definition together. This pattern usually signals bad news for traders, especially for those who are in a buy position. But since the market is two-sided, it can also indicate that we can enter a sell position. And what is meant is the continuation of a downward trend and a decrease in price. Now, what does that mean? It means instead of waiting for all of these to form and then making a decision, this shooting star after an uptrend signals a market decline. Where's bullish candle? Here it is. Where's the close of this bearish candle? Here it is. So this becomes the body of our candle. The higher part is here. The lower part is here. The low. Guys, look, I'll make it bigger so you can see it all. Sorry, the lower part got longer. Look what happened. It turned into a shooting star after a bullish trend. And when we see this shooting star, we're looking for a decline in this market. And since the market is two-sided, we can enter a sell position. Here, we can use the rules that say with 1 candle, 2 candles, 3 candles, 4 candles, we can take profits from the market earlier and secure them. Likewise, in previous candles, we can spot a doji star. Look, guys, if this doji star is the close of the last bearish candle forms a body for us with a specific low, and at the highest points of the wick, a shooting star forms. Now, what exactly is the function of the doji star? It marks the beginning of a downtrend and the end of an uptrend. Just as we said at the end of an uptrend, we see a shooting star followed by a decline. Here, exactly the same thing has happened combined with the shooting star. The candle's close forms a body, and at the peak of the wick, that shooting star appears. It signals the start of a downtrend, and we see the decline right here, combining the candle with its shooting star in these examples. We'll bring it up on the chart together and review your exercises to see if your eyes have become trained to spot these patterns in the market. Rest assured, after some time watching the market and becoming more familiar with the candles, your eyes will recognize this rule. You'll easily spot a series of shooting stars and hammers at the end of trends, and with the next techniques we teach, you'll be able to get really good trades. Now let's continue with reversal candles. This is where we left off combining candles. Reversal candles are most effective when they appear at the end of a trend, signaling a change. Pay attention, everyone. This is an important point. Reversal candles are just one of the factors in a trend reversal, not the only factor. This is a crucial distinction to focus on. Their best form appears at the end of a trend for a reversal or change in that trend. Everyone, pay close attention. This is an excellent point. There are some fine details we really need to focus on. It says they are one of the factors in a trend reversal, not the only factor. In other words, to know that a trend is reversing, we need several confirmations. Not 1,000 confirmations, not 100 confirmations, but we need to get 3 or 4 important confirmations. And with more confirmations, we can enter the trade more confidently. When we are investing and see a reversal candlestick, that's one of those confirmations. Again, let me emphasize, it's just one of the factors in a trend reversal, which the hammer is as well. I'll draw its shape here so we have it. The hammer is the opposite of the shooting star, and the doji represents the struggle between buyers and sellers. Want me to give you an example? Let's say we're going on a trip together in a car. Okay? We only check one of the factors for the car's health. Check. Does it have gas? That's one check. Are the tires in good condition? That's another check. Does the car run? That's another check, right? So we do a few checks. The engine should be healthy, it should have gas, and the tires should be in good condition. At the very least, we do a couple of basic initial checks. Basically, we say this before a trip. Let's give the car a checkup. Let's see if there are any problems with the tires, any engine issues, or any other problems. Just having good tires doesn't mean the car will run. Maybe it doesn't have gas. And just having gas doesn't guarantee it will run either. That's why, before entering a trade, we need at least 3 to 4 solid and important checks. For each of these, we'll learn how to equip you for the market, so we don't end up with a cluttered chart. No messy chart full of indicators and oscillators. Confirm trades. And on top of that, the most important principle for entering a trade is capital management. What is it like? It's like having a safe speed when you want to drive on a road. If all the factors for the car to move, the strategy we've set, even if it's perfect, still needs a series of confirmations that we get, and then we enter the trade. And again, the most important principle for entering a trade is capital management. What is it like? It's like having a safe speed when you want to drive on a road. Even if all the factors for the car's movement are in good condition, are you allowed to drive at 200 kilometers per hour on the highway? No, you're still putting your life at risk, just like if a... Are you allowed to drive at 200 kilometers per hour on the highway? No, you're still putting your life at risk. Just like if one of the wheels has a problem. Alongside all of this, we always prioritize capital management so that if any of these go wrong, the account doesn't suffer too much loss and still has the ability to trade again and capture future profits from the market. Well, in this section, we learned about candlesticks, got to know the tools that allow us to see price relative to time on the chart, what a candlestick is, what components it consists of, the body of the candlestick, the shadow of the candlestick, meaning the body and the wicks, and the 4 factors that a candlestick provides us with, such as open, close, high, and low, as well as the different types of candlestick patterns together. Candlestick summary. Next, we learned how to combine candlesticks together, learned about reversal candlesticks, and understood which of these reversal candlesticks appear at the end of which trend, and for what purpose they are used as one of our confirmations for entering the market. In the next session, we are going to get familiar with concepts such as peaks, valleys, trends, uptrend, downtrend, sideways trend, along with ranges, channels, breakouts, and pullbacks, and also be able to trade professionally.